Hello, everybody. This is AK. I'm back. No image of a warship for today's video. Reader told me that because I was holding my mobile phone and to take a video of what's on my computer screen. Uh, it was very shaky and it made the viewer very giddy. Well, and when I went to look at the videos, the last three videos, yes, I was a bit shaky, but because I was viewing the videos using my mobile phone, it wasn't so bad because the screen's smaller. But when I watched the videos on my notebook, the shaking was a lot more visible, and I can imagine why some people would feel giddy, right? I know that more than half of my viewers actually watch my videos or listen to me using their mobile phones, so most people are not affected, but about one third or one quarter of my viewers still watch YouTube videos using the PC or their notebooks, and on the bigger screens the shaking was quite bad. So until I get myself a tripod or something, because a friend suggested a tripod, and I shouldn't hold my phone and make videos that way, right? So now my phone is just sitting on a table, and what you see on screen are boxes of Ricola cough mints, which I've been taking consistently for a while now, because it's just a cough that I keep having. Right. Anyway, so enough rambling. Wait for my tripod to come before I make more videos using the screen of my computer. In my last couple of videos, I talk about how I have about $800,000 in my CPF ordinary account, and how I would be getting like $20,000 of interest income when I turn 55 from my OA alone, and how I can use that to fund my retirement. And some people ask me, why not use the money to invest for higher returns? And this is not a new question. I've been asked this question before. Why not use my CPF OA money to invest for higher returns? And up until a couple of years ago, I didn't have any real alternatives to something that's for something that's risk-free and volatility-free, and risk-free, volatility-free, and would offer higher returns than the CPF. Right? Why do I say that? Because the CPF is risk-free, volatility-free, and if I were to invest the money, it has to be in something with a similar risk profile, so something that doesn't have price risk. And when T-bills offered very high cutoff yields, that was an option for me, because similarly T-bills were they're risk-free and volatility-free, and they were offering higher cutoff yields. So it was a no-brainer that I should use my CPF money, OA money, only OA money, to buy T-bills to get higher returns. Right, but of course, if T-bills cutoff yields having gone down again to a level that doesn't make sense to move OA money into T-bills, I'm just leaving my money in OA, the CPF OA alone. And this is the whole idea is to have some exposure to high quality investment grade bonds, right? It's about how I believe investment portfolio shouldn't be 100% in equities. It should be holding something else as well, and usually it's bonds, because equities and bonds are supposed to move in opposite direction of each other. So if equity prices go down, bond prices go up, and it has something to do with interest rates, that kind of stuff. But in Singapore, we're very lucky that we have the CPF, and CPF members are very lucky. It doesn't have any price volatility at all. It just pays us consistently. Right, the money that we can't touch the money, that's for sure. But it goes into our account. It's still our money. It's just that we get to access it later on in life, and not immediately. So it smooths out the volatility in our investment portfolio. That's what the CPF does, right? So something that gives me peace of mind, right? So $800,000 in my OA, why not invest it for higher returns? I already have substantial investments in equities, right? Why would I want to have even greater exposure to equities, right? So what in the market downturn, I remember there was one year when the market did very badly. I can't remember when it was. It was in the last 15 years. And there was one year that I blogged about how money in my CPF, right, how my CPF account outperformed the stock market in that one year, right? I think it was specifically the special account outperformed the stock market one year. Could we see another bad recession? Could we see even a depression? I don't know. It could happen. Right? If something like this were to happen, then we will be happy that we have the CPF, right? Like I've said many times before in the past, if all else fails, at least I have my CPF, right? And it's the ultimate safety net, right? And I don't see any point in trying to optimize or maximize returns. I know some people talk about that all the time. You shouldn't do this. You can get higher returns if you were to do this. Yeah, but with higher returns, if there's higher risk, and often people just look at the potential returns, they don't look at the risk. And when the poo-poo hits the fan, that's when we all get splattered with poo-poo. No, there's no need for me to maximize or returns. For me, I want to be comfortable. I want to have peace of mind, and I don't want to have to worry. I already have enough to worry about. I don't want to have more stuff to worry about, and this is good for me, right? I mean, it's good for me. It might not be good for everybody, right? If it's not good for you, you want to invest your CPF for higher returns. Well, just bear in mind, the higher returns, does it come with higher risk? Ask yourself, and whether you are able to stomach that risk, right? For sure, investing CPF OA money in T-bills was easy because zero risk, zero volatility, right? So that's something that I just want to share because I've talked about this before, but some people might forget or some people might be new. Yeah, so that's all for this video. Bye bye.